Crypto markets are in the red and looking very bloody today. Again, the bears are feeling pretty smug and they're rubbing it in our faces. And that's okay. It's their time to do so. Okay, because today we're going to look through some charts and I'm going to show you why there's so much more potential in the crypto markets. It's a game of patience and a game of conviction. If that sounds good to you, come and join me today because I'm going to show you some of my strategy, the charts I'm looking at, and the way I'm going to navigate these markets. So let's jump right in. What happened to the bull market of 2025, eh? Okay, look at Bitcoin down at $86,000 today, Ethereum at 2,945. Just picking some of the top holdings that I'm holding. Okay, 125 Solana. Okay, Cardano at 38 cents, Chainlink 12.72, and where's Sui? Sui down here at 145. Okay. Some of the popular ones still, you've got BNB at 852 and you've got Dogecoin at 12 cents. Yeah, things are down considerably from their highs, but that's okay. That's okay. And we're going to explain why. First of all, I'm going to bring your attention to the total crypto market cap. Okay, this is all crypto combined and their total market cap together. Okay, now this green line is a historic line. Okay, first testing it back here in 2017. Okay, and then finding its support in the bear market of 2018. It tried to hold it around the pandemic dump there, and it didn't. It fell through, but it quickly recovered within a matter of weeks. Okay, it touched it again in the 2023 bear market, 22, 23. Yeah. Okay, and now, we haven't really rode that far away from it. Not like other bull markets, you see these big legs up, okay? And so far, we've just sort of hovered around these upper lines, okay? These are angled trend lines. I believe in them, as did WD Gann, okay? They're an average of both time and price, okay? That's why you see diagonals reacting over time at the same lines, okay, meeting up years later. Okay, it does it on all different charts of all different assets. Okay, and here is a really good one. Okay, on total crypto market cap. Now, if we zoom in right now, it does look like we're dropping below the line and it feels ultra bearish. Okay, but okay, we saw that it did that in the pandemic dump of 2019. I do not believe we lose this structure much. Okay, yes, we can come down lower for a matter of weeks. I believe then we could recover, okay? We might not even do that. This might be the bottom, okay? And we're testing the bottom. And we'll show that on Bitcoin right now. So if you've been watching any of my other videos, you'll know that I've been talking about this huge cup and handle for Bitcoin, okay? We've been talking about it since it broke out from it. Well, since it was approaching it, breaking out from it. Every candle here is a week, so we've talked about it all of these weeks, okay, pretty much, okay? And this was a retest and it felt like we was moving on into the bull run, okay? We are literally retesting it a second time. Until we lose this line, okay, I've got no reason to be bearish whatsoever. I'm not saying it's not going to break that line, and if it did break that line, I'd be looking at some other areas of key support, okay? I'd be looking at the last low, okay, around 74,000. Then I'd be looking at the previous all-time high from 2021, okay, there at 69,000. Then we've got the 200-week EMA, okay, sitting there currently at around 66,000, okay? Now, I know if we start coming down from here, altcoins will get obliterated and they will continue to do so. Okay, so that's the risk that you have to ask yourself whether you're willing to take. Okay, and you have to look at your portfolio and think to yourself, do you want to be holding certain coins if it does that? Okay, that's what you've got to be prepared for. You've got to do your own research and see where you are with that. And this is why you should really zoom out and understand what you're invested in. Do you have conviction in that? Okay, think about all the fundamental positive news we've had for crypto over the past year or so, and how really none of it's priced in. Bitcoin's done really well, of course it has, okay? But if you think about ETF approvals, Pro Crypto, SEC, Digital Asset Clarity Act, all of these, stablecoin regulation, all of this stuff that's come into play, and yet And you hear about also, like, you know, these big banks, BlackRock, JP Morgan, you know, Vanguard, you know, people coming into this space for all different types of reasons. Payments companies, credit card companies, partnerships, so many different things, yet price hasn't done its thing yet. We're going to explain a little bit why as we go through some other charts, but realistically, it's been liquidity, hasn't it? The liquidity hasn't been there for the crypto market yet. But you know, we can see that in the ISM, which we're going to take a look at in a bit as well. But just looking at Ethereum now, okay, so obviously I've got these diagonal lines here on this chart, and it's broken down again, and it looks like it's retesting. This means that Ethereum could potentially come down to like around 2K again. That's, you have to be open to that, okay? But does that mean crypto's over for the next year or so? No, it doesn't. That could happen in a matter of weeks. You could get a bounce, and then all of a sudden, months later, you're up here. Okay, this is why you have to be patient. You have to have conviction. Okay, and some of these times are quite often the best times to buy. Okay, now if you've been in the cycle since 2021, 2017, you know, if you've been in since 2017, you should have done really well for yourself. A lot of people came in at the top 2021. They've rode through this cycle. You know, look, they bought up here. Okay, yeah, they've rode it down through the bear market. They're getting ready for the bull market, and you know, they're like, oh, here we go. Oh no, that's unfortunate. Here we go. No, that's unfortunate. Here we go, and unfortunate again. And it's psychologically damaging for most people. It's wrecking them. And also, most people, and I'll hold my hands up as well, we've all done it. We take on a little bit more risk, you know. We start thinking to ourselves, you know, Bitcoin's great and Ethereum's great, but I need more gains. I need that 20x, I need that 30x. Then we start buying, you know, other shit coins, don't we? And I'm not calling them all shit, you know, a lot of them have got great utility. Um, you know, you see people talk online, 99% of altcoins will go to zero, probably. But when you talk about 99% of, you know, however many thousands of altcoins there are now, you know, when you've got things like, you know, Ethereum, Solana, Chainlink, Sui, Cardano, Near, AVAX, you know, BNB, but loads of these other great layer ones, dexes, you know, that are showing real utility and use case and adoption. And they're probably not part of that 99%. So this is where you need to do your own research, decide what coins you're investing in, and remain convicted, because we haven't had a mad bull market yet. And you know what the best thing about that is? That means it's coming at some point. I can't tell you whether it's going to be in the next couple of weeks or next couple of months, you know, but I would say it's probably coming within the next year. I believe it's probably coming in within the next few months that we'll start to see the recovery. I believe we could start to see the recovery as soon as now, really. We could be putting in lows, you know, as I just showed you on that Bitcoin chart. You know, it could be retesting that cup and handle pattern for a second time, an ultimate shakeout, proper bear trap, you know. And yeah, but looking at Ethereum, could come down there, but then again, could just reclaim and start moving up. Look at this structure, okay? You know, there's your bull market, there's your bear market. It's just been going pretty much sideways, you know? It's like, there's your bull market, there's your bear market, pretty much sideways until it went like that. And that's what we're waiting for, okay? A bit of banana zone, okay? And I believe it will come when, you know, gets a bit more liquidity into the markets. I think there was obviously a flush out, a lot of leverage got wiped out. Apparently, you know, there's a few dead bodies with market makers who are unwinding all their positions. And once that's done, the real assets that are being accumulated will run. And that's the way it rolls. You know, there's been many times where there's been mass liquidations and events in crypto, and yet it keeps coming back stronger because the utility is there and the demand and hype will be there once number goes up. You don't want to be coming in when the number goes up, okay? You want to be there before the number goes up, and that's where we are right now. So, enough of the psychology stuff. Let's get a bit technical now, okay? So, looking at Solana, okay, it's still in this kind of pennant formation, okay? You know, it's got a few contacts there, and, you know, it's at the lows of it now, yeah? And it could break either way, couldn't it really? It could go drop down from here, or it could reach up to the top again, then come back down again. We could be stuck in this for a while. You never know. Or, it could make its move sooner than that. But one thing I'm looking at for Solana is I do believe that Solana will make it no matter what at some point. Okay. So, some of these fib extension targets where I took from the low to the high back to the low again, you've got targets of 679 for the 2618, 3618 at 941, and you've got the 3618 up here at the 4618 up here at $1,196. I mean, if you're picking up Solana now at 125, okay, bearing in mind that's where it was, back in February 2024. It's not really gone that far for an asset like this. It's interesting to the institutions, and it's going to do well at some point. The numbers show that, all the data, all the on-chain data shows that it will do well. It's got huge community, developers, great dApps being built on it. It's going to do well. So those targets up here could be reality. And when you get there one day, you might be wishing that you bought more when it was down here. That's not financial advice, by the way. We don't give financial advice on this channel. And same goes for SUI. I mean, this could literally be the lows. And if it is the lows, okay, then you've got targets up here of like 768, 1189, $16, $20, okay. And, and I believe that's entirely possible. SUI's, was the golden child of the cycle so far. And I think it's yet to do its real magic. Okay, I know it feels like it's been, bashed up completely here, but it could recover quite easily and start taking on those highs. It's easy to kick a dog when it's down, as they say. And another one of my top bags, and the last altcoin before we start getting into something a bit more cyclical, okay, and showing reasons why we're still good for crypto in the coming year. Okay, so Chainlink here, still in this channel, this diagonal channel. Okay, it come back into it for the bear market, and it's just stayed in it. Okay, and that's also in this triangle pattern. Okay, and it's testing the lows of it. So most things are testing the lows of these long historic trend lines. Okay, so it's a case of, do you break those long-term structures, for a sustainable period of time? Okay, and it might be, just a short period of time that they break down if they do, but we'll have to see. Maybe they hold. If they hold, I think that will look great for market structure going forward. Okay, but like I say, if they don't hold, doesn't necessarily mean it's over. It means it could come down to just more one of these horizontal levels. Okay, and like I say, so reason I have these fib levels marked out on the charts, and I suggest you do that, and I'll show you how you can do that actually, just to quickly. Okay, so you go to here, you grab your trend-based fib extension tool. Okay, you go from the low of the bear market, okay, to the top of the bull market, okay, of the previous bull market, and then you bring it back down again, okay, and then it gives you your lines here, you see. And then what I do is then I go and grab a horizontal line, and I put it on there, and I make my red one, I make my purple one, and and my orange, golden one, whatever color it is, and then that's how I do that. But it's a great way to figure out where you might want to take profits, sell, and everything like that. What I would be doing, when we start getting up there, I'll just start taking, big chunks of it. I can't tell you how much of each position I'd take at the moment, but I would go heavier. So maybe I'd start with, 20% there. As we go up, maybe I'll take 50%, and then maybe I'll take 80% up there, leave myself with a small moon bag if it continues higher, or just for the long term. If it's an asset that I just don't want to sell all of it, maybe I want to hold some of it for the long term. But I am a cycle trader. I'm going to trade the cycle, and when it gets to these points here, they're Fibonacci levels. There's no guarantee it's going to hit any one of them. But, I think it's always good to take profits. No one ever went broke taking profits, did they? Now, people often ask me why I'm always sort of calm, unemotional about the crypto markets and everything like that. Well, it's because I put four pieces of the puzzle together. Okay. First of all, you've got cyclicals, then you've got technicals, fundamentals, economics. You can get all four of those in your head and put the pieces together. You can see the picture of what's going on. And when I say cyclicals, I don't mean the Bitcoin halving cycle, okay? I mean other things such as the business cycle, the election cycle. These go back way further. Things like the real estate cycle, the 18.6 year cycle. I've got another cycle called Shemitah, which is every 7 years that I follow. I follow all these cycles, but I also look at emotions in the markets, okay? And things happen in stages. You know, for there to be a bust, there needs to be a boom. Yeah, for there to be a boom, there needs to be a bust. And all of these things happen as a cycle, okay? And all these emotions play out within those cycles. We haven't had euphoria, we haven't had thrill, okay? People can say what they want about the AI bubble. I don't believe it's even an overheated bubble yet. I think it's just getting started, and I think it's going to be absolutely huge, like the dot-com bubble. So you're still very early to AI, in my opinion, and you're very early to crypto as well, as a matter of fact. And the ISM shows that, okay? The ISM, you know, it's a great indicator. You know, called the 2008 lows. Yeah, it clients called the recovery of the from the GFC. It's also got, like, you know, like the 2017 highs. Okay, it's got the you know, the pandemic lows, 2021 highs, and look where we are. We're just low. We're low still. And I've marked off these readings here of where I would also take profits. So not only am I going to be looking at my charts and my top coins and holdings of fib levels where I'm going to take profits, I'll also be taking profits where, you know, it's hit these levels before. So obviously the 2014 cycle, you know, hit around this 56 level. Okay, 2017 hit this 59 level. We got really overheated in 2021. Not sure we'll get that high again. You know, due to liquidity. I mean, so much money was pumped into the system for COVID. 64.84. You know, so I would be also scaling out more depending on where we are here. Okay, I'm not sure I'd be waiting for that red level at all. Okay, but at the same time, when you say to yourself, well, you know, what if we don't go there? We will go there eventually, and that's it. It could take, you know, months. You know, it could take a year. Who knows? But I believe in the crypto space. I believe in the coins that I'm holding. Well, most of them anyway. I've got a few little shit ones that could probably do with being disregarded. But you know, my main bags are ones I've got good conviction in: Sui, Solana, Ethereum plays, and all of that, and Bitcoin, of course, as well. So I believe this will go up eventually. It's so cyclical; it will go up. I believe as the Fed cuts rates further, as there's you know, a bit of quantitative easing coming in, which will come because it's all part of a cycle that it always comes. Okay, and you know, then this will head its way up. Okay, and you know, it's going to happen at some point. But like I say, these levels here would be levels to watch. And I suggest you do that on your ISM chart, mark off some places, just as a reminder, because when you see this squiggly line getting up there, you need to be going, actually, do you know what? Things are getting, and you start to see that euphoria in the market a little bit more. Maybe that's when you need to start taking profits as well. Okay. And we're going to show some more charts now where I've got similar sort of targets and views of where I think things could get to, and that are going to help me on taking profits. Literally, as soon as we start getting out to some of these levels, I'm going to start taking profits. That's what I'm going to do. You know, I'm not going to try and hold it all the way to the top. No one can always pick the top. No one can always pick the bottom, because when you pick the bottoms, you get smelly fingers as well. Don't forget that. So, and then we've got Bitcoin Dominance, another one. So, two of the main charts that I'm going to be watching are the ISM and Bitcoin Dominance, because, as I've always said, Bitcoin Dominance won't end a cycle at the highs. Okay, it'll end it down low. Okay, will it match up to previous lows? If I zoom this out a little bit, you know, we've got all these lows here. Okay, will it come down to this line again? Who knows? But I won't be waiting for that, because see here, I've got these yellow lines here. Okay, because they are support resistance levels of the past. Yeah, I could imagine Bitcoin Dominance definitely getting down to 48%. I'll start nibbling my profits there, DCAing out. okay? And then if we get down to 44, take some more. And then as we start getting into this orange, between the orange and red, if we get there, I'll be taking more. You know, there's other things I'll be doing as well that, you know, say if it doesn't get to these levels or the ISM doesn't get to those levels as well, I'll start to see certain things changing and turning, and then I'll just start layering out bit more, okay? Like I say, just as soon as you get into these sorts of zones, just start taking some profits and you won't go far wrong. You won't round trip the whole cycle, you know? And don't start telling me that the cycle's already over, because I don't believe it is, okay? All of that 4-year halving cycle stuff, you know, I think it worked in the past because it worked with the business cycle. Because the business cycle's got extended now, it's not stuck with it, you know. So you know, at the moment the bears think they're right, they think they're smug, because they think that the cycle's over, because, you know, it dropped in October, Q4 of the post halving year, you know. But all those other times the ISM had peaked, and the ISM hasn't peaked in this cycle, okay? And the ISM is like the Bitcoin dominance inverted, by the way, as well. So it kind of works in sort of similar time frames, okay? Might be months out, but it's roughly on the same timing, okay? And yeah, so I believe, yeah, this is where I would start taking profits on Bitcoin dominance, these lines here. Go and mark them out on your own chart so you know when it happens. And as a reminder, this is where I should take profits. Now, another one I've been looking at a lot recently, okay? Now, this is gold versus Bitcoin chart, okay? The gold BTC pair, okay? Now, each cycle, and you can see the dates marked down in here, you've got 2011. So we'll look out for these blue lines, ignore the white lines for now. Yeah, November 2013, yeah, November 2017, you've got April 21, November 21. If you've been in the cycles, if you've been in crypto for a while, you'll know about those dates, okay? Yeah, because if you look, okay, now let me match up Bitcoin with that. Now, I'm not going to zoom in on all of these, okay, because it's just long trying to track them all up. But you can see here, you know, it marks the lows of Bitcoin, sorry, gold versus Bitcoin, match the highs of Bitcoin USD pair. You know, there was 2021, there was 2017, and, you know, if I was like to go like that and bring up the others, okay, there's 2017, and then there's 2013, and I can go back to 2011 and all of that, but let's get rid of that for now. Okay, so now move that out of the way. Okay, so the other things I wanted to point out here is these patterns, okay? See these where I've marked these white lines, okay? What you've seen is a low, a top, another low, looks like it's going to recover, rolls over, okay? And it did that in each cycle, okay? Low, high, a low, looked like it might recover, but no, it rolls over. Yeah, low, high, low, roll over, yep. Same, and it's been doing the same now. But each time, something I noticed, right, is this one, okay, this decline here. Say it rolled over from there, okay? 99% gold lost against Bitcoin. It was down 99% against Bitcoin in that period, okay? This drop, okay? Same for, that was 2011, okay? That low in 2011, and that was a top in Bitcoin, okay? Then we had 99% down in 2013 to this low, okay? While Bitcoin was making a high. The exact low for that month was the exact high Bitcoin, or that week even, okay? It's that precise. It's that precise. Trust me, go and look at this. So it's ZAL, which is XAU, BTC, which is gold versus BTC, okay? Again, 2017, 99% down. So 3 cycles in a row, 99% down, gold went against Bitcoin. That is absolutely madness. Like, it might be 99.2, 99.5, whatever, roughly bang on. Then 2021, okay, it went down from the point. So I'm measuring it from the point where it rolls over, yeah? So I measured it from that high there, you know, I measured it from somewhere here, and it rolled over, not the top high, more like the bit where it's like tries to recover and rolls over. That's where I'm measuring it from. So see like this shoulder here, yeah, the shoulder, yeah, shoulder, okay, that's where I'm measuring it from, okay. So it's 99% down in 3 cycles, 93% down in the 2021 cycle. And like I say, it's doing this same pattern again, but it's a bigger pattern. This is why this cycle's taking longer as well, okay? So you've got this lows, which is more like a double bottom, a rise up, and then it's got another low, double bottom, rise up. And this is the point where, and I know I'm looking at this triangle and I'm thinking it looks like it's breaking out, okay? Which would be really bearish for Bitcoin long term, because what, is gold going to just rally against Bitcoin forever? Well, I don't think so, because if we look at gold, I mean, it's taken out fib levels, took the 2618, took the 3618, heading up to the 4618, is it? Don't know if it'll make it there. Might do, I have no idea. But gold will go up forever against the dollar, of course it will, but it's going to have breaks. It's going to have periods of consolidation, okay? In all other cycles, it's always had periods of consolidation. Even if it's like one of these periods, that's like years, yeah? That was years, This was years, okay? This was absolutely years, okay? And look, it's taken quite a big move already. Doesn't mean I don't think it can get up there, okay? But whether that happens in the next weeks to months, it tops, or whether it's topping now, I don't know. But what I would say is we go back to gold, BTC, okay? I believe that it's going to roll over at some point. Whether it gets up to this high here or one of these levels here, this will roll over. And then when it does, I believe it's going to go down an average of a 90% drawdown, okay? It's going to be, I'm just going to say 90%, okay? Maybe it's another 99%, maybe it's 93%, but when it starts to get 99%, when gold is 99% down against Bitcoin in a move, okay, that's where another place I'd be saying maybe the top's in for Bitcoin now. Okay, start looking at your altcoin positions, start exiting, and all of that as well. So that's another confluence that I'm looking at. Now, next one to look at, again, more precious metals, okay, because precious metals are very cyclical, and they show us what could be going on, okay, and they tell a story. It's like reading the tea leaves here, okay. So copper versus gold, okay. Now, each time it's made a low, okay, so if you look at the lows, okay, going back, there was a low on the ISM, okay, previously. And also when you put the 14-day RSI on it, the RSI shows you when it's pretty much bottomed, okay? So what we can see right now is that copper versus gold potentially putting in a bottom. I like that little wick there as well, because wicks like this can often indicate a bottom, okay, where they get bought up, okay? And it looks like it's putting in a low here on the RSI. Obviously, we know the ISM hasn't broken up yet. Okay, usually, if we see in 2020, that was March 2020, okay, the low, okay, indicated the low on the ISM and the recovery soon after, and we saw that on the RSI as well. And 2016, okay, before the 2017 bull run, okay, very similar. And you can see other times as well, some of these lows as well, like 2012, 2014. If you want to see more on this, go and check out my most recent video called the halving cycle versus the business cycle, okay? And I'll share a link to that right at the end, okay? Anyway, so yeah, like I say, these call in the lows together, okay? And they're completely different things, okay? You've got copper and gold, you've got the ISM, okay? Completely different things, yeah, very cyclical, and follow each other. Their lows hit at the same time, their peaks hit at the same time, yeah? Hit the peaks, yeah? So that's a good one to watch as well. Now, where would I be indicating to take profits on this? Okay, well, obviously this goes up, okay? Now it's hit this top of this channel a number of times. So if I see copper, and it does create lower highs, okay? So if it was to, hit up at the top of the wedge again, okay, maybe the RSI starts getting higher, up to about this 60 level, that'd be a good place as well. So when I start tying all these, I'm tying in all these charts at the moment, telling me we're at a low. You know, it doesn't mean Bitcoin can't go a little bit lower or your altcoins can't get a bit more ranked, but it's telling me we're at lows. So lows are good times to accumulate or just hold on. Okay, and highs will be coming in the future. I believe that. So the next one as well is the DXY. Okay, now the DXY, it's like a bit of an oscillator, really. Okay, as we see, it's never really left anywhere, but these ranges between, you know, like it went up as high as 120. Okay, it's been down as low as 71. Okay, 70. Okay, now, but the most common areas for it is around here. Okay, yeah, it's touched down at lows anyway. So obviously in the 90s, it went a lot lower. Okay, it went down to these sorts of like 81, 80 levels. Okay, now, but it definitely reached around this 89, 90 level back in 2017, back in 2021, you know. So I do think I could see it going back down there again. I know everyone's looking at this long-term channel, okay? Does look bullish. If it was on, you know, one of your favorite assets, you'd be saying that's bullish. But that disregards economics, okay? Trump and Bessent want a weaker dollar. Okay, they need to do that to refinance the US debt. So they will find a way of getting it there. As interest rates drop, it should come down. Okay, and then we'll see more risk in the markets. And you know, it's struggling. It's been struggling to reclaim this level. Now this is on the monthly. Okay, so we've got 1, 2, 3, 4, 5, 6, 7, 8 months of just not being able to get up there. I do think it's in a downtrend. The EMA say so on the monthly. They also say so on the weekly. Let's look at that on the 1 week. Yeah, and yeah, it's still the 5 and 13 EMAs on the weekly are rolling over. So the dollar could be on its way down again. Okay, so but when it does, and if it gets to these 89, 88 levels, you know, that'd be another good place to be taking profits as well. I believe I would start probably taking profits from the 92 level. These are all things as confluences, put all these pieces of the puzzle together, watch all of these charts I've been showing you, and you will have a good read on where you are in the markets. Don't matter what coins you're in, what assets you like holding, don't matter if it's a stock market, crypto. Looking at all of these charts, okay, will really help you, okay, especially these, you know, uh, gold and copper ones, and the ISM and the DXY. And then those of you that have been watching me for a while know about my USDT chart, okay, with the party zone and the after party, okay. Party zone is where it's all the fun's going to be at, and the after party zone is where, you know, the dregs are kicking about, and you know it's probably time you should leave, okay. And yeah, so yeah, that's the point where you should probably go home when we get into this area here. And this is all made up by previous support and resistance levels. Okay, I believe once we leave this 3.7 level and drop down into it, that's where it's going to be all good. Now, USDT dominance, okay, it's got this downtrend, okay, and it's up there. It's been hanging up there for the past weeks, okay, and people are probably worried that USDT dominance is going to break out to the upside. But I believe cyclically, with all some of the other charts we're seeing, when those other charts start to react in the way we're waiting for them to do so, I believe this will come down as well, and this is where you've got to be starting to take profits as well on certain altcoins. Okay, definitely if you start getting into this after party zone. Okay, now if we look at the RSI on USDT dominance, okay, it's quite a higher reading right now. It's not as high as it was, you know, back in 2022, okay, in the depths of a bear market, okay, but it's higher than some of these other readings we've had over the past years, okay, and it's about as high as it's got, okay. There's only been a few readings higher than this, okay, which means that it might be a little bit overbought, okay, and it should come down eventually, and I believe cyclically with the other things. So just another one to put on your list, okay. All of these are strings to your bow, and they will help you navigate these markets. And if you're just feeling like you've had enough at the moment, and you're feeling like, you know, you're just getting absolutely crushed right now, and you're like, how much longer can this go on for? Okay, now I'm looking at this and I'm thinking, how much longer can this go on for? Okay, all of this short leverage that could be liquidated, up to around 8 billion, just getting to 97k. If you start going over 100k, 110, there's more, there's billions more, okay? And they've been taking billions from the longs for a long time, okay? It's been getting crushed. Eventually, they're going to, whether you think this is a bear market or whether you believe me and believe that, you know, the cycle's going to continue and you're going to read all these charts and they're going to lead you the way, okay, whatever way you believe, okay, they're going to go for some shorts at some point and they're going to do a really hard liquidation event, okay? Just like we've seen to the downside, okay? Big bounce is coming at some point. I can't tell you when. Like I say, none of this is financial advice, but it's coming at some point. Well, I hope you've enjoyed today's show. Just like I say, add some of those charts to your list, okay? Watch those charts. Don't keep staring at your favorite altcoin. Don't keep clicking on your portfolio, refreshing it every 5 minutes, hoping that it's going to start going up and get back to where it once was, okay? You know, what you've got to do is you've got to believe in other stuff, okay? You've got to not only have conviction in your bags and, you know, all of that and in crypto and everything like that, but you've just got to have conviction in yourself. You've got to have strategy. You've got to have, you know, knowledge about certain things and the way the markets work. Okay, I recommend you check out Real Vision. Those guys, Raoul Powell, Julian Biddle, really good at helping teach you economics and things like that. Okay, Henrik Zeberg's really good as well, although he's very bearish on the recession coming. Don't let that panic you too much because no one can predict when a recession's going to come exactly, just like no one can predict a bottom or a top exactly. Okay, it's a period of time that it's going to come in. And one thing that Henrik Zeberg says as well is that, you know, we will get a euphoric market before we get to bust. And that's what I believe. So that's what I believe from him. I believe that Raoul Powell and Julian are right about the ISM, and Tom Lee's bang on it with the ISM, the copper gold narrative. And I've shown you today the gold. I've not seen too many people show the gold BTC one. I'm going to perhaps do a bit of a longer video on that and look into it a bit more. So watch out for that. But like I say, the overall structure of like some of the big cap coins like your Solana, Ethereum, Bitcoin themselves, some of the total charts, total 2, total 3, you know, they may look bearish in the near term, but you know, the structure is still there. If the fundamentals are not even priced in for crypto, really, if you think what's actually happened, liquidity to come, more rate cuts to come, you know, Trump's Fed chair will be in early next year, and all of this is there to play for, and it's not a time to get scared and panicked out of your bags, you know, running for the hills when the opportunity of a lifetime is probably still there and coming soon. Obviously, never risk or invest more than you're willing to lose, because that's just going to chew you up. It's going to mess with your psychology and everything. So you're better off being with the right amount of money in the market that's right for you, and you know, do your own research and understand the risk that you're taking. But at the same time, if you've done your research and you're convicted that this space is going to move forward, you know, whether it's in the next month or two or whether it's in the next 6 months or longer, you know, if you remain convicted and you know your strategy and understand the charts that you're looking at, you will hold and you will ride it through, and eventually you'll be the one that wins. Okay, don't listen to all the voices online too much. There's too many voices. Okay, I know I might be one of those voices, but like I say, I'm backing it with charts that I can see cyclical things happening, and I believe cyclical emotions will happen as well. And it's all part of the cycles, the big cycles that happen over and over again, and they will continue to do so. So if you like the sound of what I'm talking about and you want to hear more, don't forget to like and subscribe, follow the channel for more, and don't forget to check out some of my previous videos like the one sharing right now. Thank you.